Good afternoon. I hope that now the sound is okay. I guess that you didn't hear anything that I said a minute ago. So good afternoon. My name is Danny. This is the beginners online trading webinar, and I will give you this webinar today. So first of all, welcome everyone. Before we will begin, I'd rather us to have a nice sound check. Okay, if you can just use the question section to comment that the sound is okay on your end, and that you can see the screen over here. There's a lovely screen here. Thank you, Smith. Very good. More people just to comment that the sound is okay. Kim, very well. Chang, okay. All right. Everybody else, I hope that you can hear me just fine. I see people raising their hands. Just wait until the introduction, and then if you've got any questions, you can still write your questions down, no problem. But first, I want to explain how the webinar is going to happen. So first, we will have a nice introduction to the facility, to the website, to the platforms, and to the company. We'll understand a little bit what services can contribute to your adventure. The second part will be the majority of the webinar. It will be more into the details, as in certain things written here to the right, leverage, margin, spread, value, also just the basics about candlesticks, what else, calculations, some how to access information that you might need, and so on. And lastly, it will be a third part can be optional if we will make everything that we need to cover. Perhaps the last part will be analysis, okay? The third part. All right. So, before we hit the road, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, guys, the webinar is recorded, so rest assured, even if you didn't understand my first explanation, or there is just any other reason you want to see the webinar, you can comfortably find it on our YouTube channel. Could be today, could be usually it's up to 2 days, okay, without any commitments. And all right, so I'm gonna make sure that the webinar is recorded, so just excuse me for a few moments, then I'll be back and we will begin. All right, thank you very much. Okay, all right, so everything seems in place, and now we can officially begin. Like I said, I'm Danny. This is the beginners online trading webinar, and before we will begin, I would recommend you guys to do the same and get yourself somewhere to take notes, okay? And we will begin, as I said earlier, with an introduction to the company. Okay, so AvaTrade exists since 2006. All of you already know we're a regulated company. We have 9 licenses worldwide. Our customer service team, in case you got any questions or queries, are right here at the bottom left. Okay, through this nice interface, which is called the web trader. Okay, it's also on the app. This may be the desktop version, but it looks very similar on the app, on the mobile. Okay, in case you've got any questions, the customer service can be addressed by the chat or the WhatsApp or through email. Okay, and they will take care of all your customer service inquiries. And we also have a senior account manager. The senior account manager taking care of the trading side. We don't charge the service for a senior account manager. You get it as a service from the company. So that means that you can address the senior account manager with any questions you want through the email, even about a trading plan or a strategy, or just a simple explanation regarding the candlesticks or anything else, analysis, whatever else you want. The senior account manager can be there. But to get one, you need to make a deposit and get moving. Okay, and if you didn't receive a message from your senior account manager, you can address the customer service and ask for assignment. Okay, now beside this web trader, we're gonna go a little farther with some features we have here. But first, I want to name the other platforms that we have, which are usually people are more familiar with, which is MT4 and MT5. And as in addition to that, we also have AvaSocial and AvaOptions. Now, the idea with AvaSocial is quite self-explanatory. It's a social media trading, but what it allows you to do is to follow other traders and get their strategy, just get their positions, what they're trading. You're going to get a nice message, and you can decide if to do it or not. Okay, and this way, as a beginner, it's really, really a huge time saver because I'm getting somebody else's strategy without basically doing anything. Okay, that's called to follow. That's called follow on the app. The app itself, you can download that for free. You got nothing to lose. This is an amazing app. It can contribute a lot of content. When it comes down to following somebody or copying somebody, because you see the traders through lists. Then you can pick whoever you want to follow to get perhaps if you're following somebody with a succeeding strategy and you want to make your own strategy, so you can take the notes and make your own strategy. The copy function, it's what I've explained just automatically. So I can copy somebody. I've picked a trader from the lists that I think that it's good. And what happens is I link my account to his account and it happens automatically. I basically don't need to do anything. Okay, I can be busy doing something else and it will perform by itself. The only thing though is that I have to adjust my balance to his balance if it's not compatible. Okay, if I'm following somebody that has 100,000 and I'm with 10,000, obviously if I'll do the same things, it might result different things. Okay, because of we're gonna speak about margin, but I hope it makes sense. Okay, AvaOptions is something we're not gonna go too far with. The reason is this is not the purpose of the webinar, but I can just say that the app itself is very innovative and it allows you to see predictions and statistics, and it allows you to very easily to resell or rebuy whatever you want later on with your option, and it's just amazing, so you should try. Okay, and it has a nice tutorial, and on our YouTube channel you can find explanations and guide through about the platforms and much more than that. So if you're looking to expand your horizons, it might be very interesting adventure to try. Okay, now beside the platforms that I mentioned a minute ago, we have the primary platform which we are going to go through this webinar, okay, which is, like I said, the web trader. It also has an applicable version. Okay, we're gonna fall down the sky. So before I'm gonna carry on with my explanation about the platform, what I want to do is just gonna get rid of that. This might be what you see. This might be what you see when you're logging into the website. Okay, this is what you find by default. Now we're gonna make some nice adjustments, okay, to the chart, not just to the chart, to the whole interface, so we can enjoy it to its full extent, because right now there are certain things I can't see. Now, what I want to do, as you can see, there are two tiny arrows here at the upper right, so I'm going to click it to minimize down the screen. I have a toggle here which I can determine how high or low I want it to be. Let's keep it this, for now, let's keep it this way. Okay, now I can scroll down. What I'm doing is I'm scrolling down with the wheel on my mouse, but I also have a nice toggle down here, okay, which I can play across the categories. One more adjustment that I would like to make. You see that my mouse my crosshair doesn't provide any information from the candles, right? So to analyze the sway might be challenging. What I want to do is I'm gonna go 3 times from the search bar. This is, by the way, a search bar. Okay, I can put here gold, just pick it gold if I want. Okay, if I go from here 1, 2, 3, I have my crosshair. Okay, so 1, 2, 3. I'm gonna change my no crosshair to crosshair, and then it's easier to analyze. Obviously, I get the information from the candles and I can see what I'm doing. Now, let's fall down. Okay, in a later stage, if I click sell or buy, so it's going to open here a nice sidebar to the right. Then I can maximize again the chart if I want to. Okay, we're going to speak about it later. There is really no need to carry on with that for now. Okay, now once I've seen, oh, let's go back. Now, once I have done those things and I can see the whole, I can see the lists and the rest of the things right here. So we can carry on with the guide through. Now, we're going to go down from here. Okay, we have 3 features. It's a little more than that, but we're going to go from here down. We're not going to go through everything. We don't have time for that. Just the important things. We're going to begin with the signals. Okay, so I'm going to show you 2 ways to use the signals. That's extremely accessible. There is nothing too difficult with that. Maybe I'll show it to you this way. Okay, first I'll show it to you from the outside, then we're going to go through the signal section itself. Okay, so you see this blue icon thing here, right? Looks like lightning, or I don't know exactly. We're going to click it, and it's going to bring to the right the signals specifications. Now, those are pre-analyzed technical support and resistance. They are based on certain pivot point that we have here, okay, which are certain key levels. We have support at the bottom. Just the general concept, okay? Maybe we'll speak about it later on, but just to understand how it works. Resistance will be my roof. It will be in higher points, edge points above my price, and support will be underneath, supporting us from falling farther. So this might be support, this one is support, this support. Okay, if I'm looking in an overview about the time frame that we're looking at, this might be also the further support line. In here we have another one. Okay, and resistance will be higher than the price, always. Okay, this one is also somewhere, yeah. Anyway, you understand the idea. So what the signal is doing, the signal is giving it to you automatically. Now, when I choose my signal, let's suppose I decided to go with Australian versus Japanese yen. And I'm going to go with the, as you can see, we have 2 scenarios here. Okay, in here there is an explanation, long positions above 96.49 with targets at 97.32 and 97.53 in extension. Then that means I have certain pending orders, okay, that are activated automatically. So as soon as I click here, if I choose the buy, you see it's lined up support and resistance. So if I click here on the buy, it's going to automatically land a take profit and a stop loss on the chart. Okay, if I choose buy here, it's showing me the possible profit and the possible loss. So I can choose which scenario I want. So let's suppose I don't want to go with the buy. Let's say I want to go with the sell. Just a second. Okay, so I just want you to understand how simple that is. So we clicked once, we clicked twice, and there we go. Okay, very simple. Already here. Click 3, and it launches the position. This is give or take how the signals are. Now, the benefit with using the section versus using it from here, from the outside, is that here you see that there is signal produced time. The production time is not now, right? But if I go to the signal, so basically what I'm telling you here, guys, is you cannot know when the signal was produced from here. But if you go to the signal section, you see it's lined by the time that it was produced. Now, for people who are more experienced, you must understand there is an impact on when the signal was produced versus the scenario that you're choosing. Why? Because who can tell me why does it make any difference between? Okay, let's just ask here a hypothetical question. Why is there a difference between signal from let's say a minute ago to an hour ago, right? Why there is a difference, guys? What makes the difference? If I've got a, it might be better to use, well, Chen, it's interesting what you're saying. It's better to use the signal that was just made, but why does it make any difference? Because, let's see, Henning, because the actual situation may have changed. Exactly, perfect. That means, let's use something here as an exit, just to understand. Well, we're not going to go too far with that. I just want you guys to be able to use it efficiently. That's all. So we're going to look at oil. Oil was just, well, it was approximately half an hour ago, maybe more than that. Okay, never mind. What we're going to do is we're going to compare the scenarios. We're just going to compare the scenarios. Okay, so let's suppose that we are with, oh, one more thing, guys, before I carry on with my comparison. I want you to see that the levels are different than the levels that are on the chart. Okay, I just want you to see that. You see 71 is as far as I can go. See 71.1 or 71.09. Okay, fine, that's fair. But on the chart, sorry, on the on the signal, it's 72.5. So how exactly am I supposed to see that? The problem is, guys, is that now this one is daily. So each and every candle here is daily, is a daily candle, right? So this picture here, to see that, I'm looking at minutes. Okay, when I click here on the left-hand side top corner, I see here time frames. And if I scroll down, I find days. So I'm gonna go with 1 day. And then I'm supposed to see the levels that are here. Okay, come on. There we go. Oh, it was 55. Never mind. So you see, the idea here is that for you to be able to have a nice overview, you must make comparison between the chart to the signal. Okay, and then you can make comparison how good the scenario is. Now, what we're gonna do is we're gonna go actually with the sell scenario. We're gonna go with the sell scenario. And then that's gonna show us the possible profit is 72 and possible loss is 78, which again, it's fine. It's a nice ratio. It's not too good and not too bad. But let's take something that was produced. Well, let's go with copper. Well, you see, this one doesn't even exist anymore. I mean, it exists, but the signal doesn't show. Let's go with maybe Bitcoin. Why not? Okay, let's go with Bitcoin. And then I'm gonna go again with the sell scenario. Okay, you see possible profit 86 and 59, but if I'm gonna switch, let's make it a little more interesting, right? So we have possible profit 860, possible loss 600, but if I'm gonna go with a sell scenario, with a buy scenario, just a second. So the scenario, the ratio stays the same, but it's the opposite, right? I can lose 800, I can gain 600, and this is something that I might not like. So when I'm taking a signal that was already that was produced a couple of hours ago, I must remember that the signal was the reference for the signal was the price that it was produced with, and it's not changing to the price that I'm looking at right now. Okay, so keep in mind you want to have a signal that was just produced if you compare it to a signal that was produced 3 hours ago. Okay, but because of the comments, somebody here, Henning, you wrote very nicely because the actual situation may have changed, and I can tell you that absolutely it will change. Okay, what happens in the market is 2 hours. In 2 hours can be very significant. Okay, all right. Let's get rid of those lines. We don't really need them for now. Okay. Right. And by clicking here, it throws me back to the start. Okay, if I have lost my way through the web trader, I'm just going to click here on AvaTrade, trade with confidence, and you can have the confidence to go back right to where you started with. All right. Now, the second thing that I'm going to show you is, so this is, by the way, this was right here, right? I didn't do anything special to access the signals, either from here, either from here. Sometimes you're not going to see that. You see, some assets may not have it. You see the CAC 40 or the YAX or the DAX or the you see all here. The Asian market doesn't have it now. Okay, just to show you. Sometimes it happens. Sometimes it doesn't show. The second thing that I'm going to show you guys is the news section, and the news section is divided very nicely to that's showing. So you see there are categories here similarly to the lists outside. So we have forex, stocks, commodities, indices, and cryptos. I can refresh the page. Sometimes something new pops down the list. I have all kind of news pieces here. Okay, and I can see at the bottom of my window here, I can see one related assets. Sometimes there'll be more. You see, if I'm taking one of the indices as well, so we can see two things might have an impact to that. What else? What else? Oh, you see, sometimes things, several things are related. Okay. Also, yeah, not all the time, but sometimes you can find some golden nuggets on this. Farther down, we have the discovery. We're going to go through the economic calendar. So we've seen technical analysis, support and resistance, pivot points, very, very interesting. And now what we've been looking at, the new section is something called fundamental analysis. I'm just going to put it down for you guys, actually, for you to. Okay. We have technical analysis, support and resistance and averages, and we have fundamental analysis. Okay, which are based on news. So this is how it's moving, and this is why it's moving. So fundamental analysis can indicate, as an example, let's go with the economic calendar. Okay, so this also divided to not really categories, but you see what I'm doing here. I have a nice toggle here to the right. If I go down a little, I go down. You see I have flags here. I'll teach you a nice trick how to clean everything here. So I can just choose here on the box. Oh, sorry. All countries, my bad. And click here on all countries again. And then it's going to show me everything. And I can choose something specific if I want. Maybe if I like the Asian market, we can go with Japanese news. So that's going to show me all the Japanese related events coming down. We have it segmented with the last result, the expected result, and the actual result, and how big of the impact is. Obviously, previous will only be on things that has reoccurrence. Forecast is something that we expect. It's based on certain economics. Actual will only appear after the occurrence already happened, and importance is well, I guess it's quite understood. This is low impact, medium impact, and high impact. and I don't have to focus on things that I don't. If I want to only to go with the important things, I can click here on the high, sorry, and it will only bring me the high impact event. What else I can show you about the economic calendar? If I want to know about the specific event on a specific day, okay, let's suppose we're gonna go a little farther. I'm not sure that we have the time to go through that now. Okay, I'm just going to show you what happens if you click it. So if you click on something, it's going to elaborate. You see, you have here the volatility, price chart, impact. We already went through that, the event chart, and to add it to my calendar, which is amazing because later on I can see if I'm using Outlook or something else, it will be into my calendar. Okay, and again, it's a huge time saver. You don't have to go through everything. You're just gonna get a nice message about the event, and then you can get prepared and trade accordingly. Okay, I think we pretty much concluded the guide through. I mean, I don't want to go too far with things around here because I don't want to teach you the basics, which I'm supposed to. Guys, are there any questions till now? Are there any questions regarding anything that I've explained? Anything at all? Okay, so we're gonna take maybe 20 seconds break just for me to sip something. I'm sorry guys, but it seems like I have to get some liquids. So just 20 seconds and then I'll be back and we'll carry on. Thank you very much. All right, we are back and we are going to begin the second part. Okay, so what will happen now is we're going to go through basic fundamentals, basic essentials for trading. Okay, it's not really, it's for beginners, but he's French. you think that I'm French, but I'm not French. Okay, I may be, well, I could be a little French. Never mind. Let's carry on. So, strategies, no, unfortunately, Ching, I'm not going to teach you strategies. I wish we had the time to teach you strategies, but we're not here to do that. We are here to learn how to trade properly. Strategies are something that you evolve by yourself. Maybe on a nutshell. Later on, we'll see. So the second part. So like I said, we have done some preparations. I want you to see the difference. When I go with my mouse across the candles, nothing happens. Okay, so this way I can't analyze anything that is on the chart. Okay, but if I change the crosshair, then I see the levels. I see how many pips the pair has moved. Okay, and it allows me to determine. Okay, before I keep explaining, I just want you to get a nice recognition of what's happening up here, just so you guys will be able to access everything here, right? So this is the search bar. Let's look for an asset. Let's see how corn is doing. Corn is down. Okay. Fair enough. Platinum, maybe, let's see. Also down. But I guess it might be fine. Okay. Okay. All right. So let's keep going to the right. We will understand what each button here is doing. So this is the time frames. You've already seen how I played between the days, the weeks, the months. Okay, so that means that each candle here is gonna stand for one day, right? Each candle here. I want you to look at the squarey bubble here. Okay. This is, you see, this is the day, right? This is the date. So if I keep going, you see there it's changing. Now it's the 7th, the 8th, the 9th, the 10th, and so on and so on. Weeks will be 7 days difference. Okay, you see 7th, 14th, 21st, 28th, and so on. Months. Yeah, I guess you guys understand the idea. Okay. If I keep going to the right, I don't have to use candlesticks. I can use this nice little line, which makes this one looks a little bit like the Everest, right? If I put somewhere here, we can find, this is give or take the P, right? This is the peak. It could be a nice snowy mountain. So why, if this is such a nice line, why should I use candlesticks and not this line? Because this line describes, let's see together, it describes bullish, bullish. So you guys know the famous story, right? Bullish, a bull lift his opponent, and a bear slam his opponent to the ground. So we have a bull and a bear, right? So if this looks very nicely, why should I use candlesticks and not the line? Okay, what benefit? Let's get rid of everything. Yeah, I guess so. Pretty much done with the introduction. Okay, so why should we use candlesticks and not the line? So guys, there is an answer here. You don't see the price range with the line, but I do. I think that I do, right? I mean, I kind of do. Okay, but yes, your answer is pretty good. Yes, that's correct. You don't get the levels as much because with candlesticks it's more specific, right? A candle is made out of two things. It's made out of open and close, high and lows. This gives it's given it its unique shape that according to that we can determine part of a formation. So a bunch of candles has a name. This one is quite not really has a name to it, but as you can see, we have bullish and bearish. We have here some, well, I can't find it now. I'll step backward. There's some nice formations. This is actually pretty good. This is actually very interesting, right? It's now nice retracement over here. This is as well. You see, this candle ended a little higher. There are two gaps here. Candlesticks has more sticks. That's correct. That's correct. Okay? So we understand that the candlesticks are giving us different levels, and we also understand that if this has created a vice versa candle, so this could be a possible sign for retracement, which ended up very bearish later on. Okay, otherwise it could have just kept it going this way. And you agree with me that this is different. Doesn't let me do it. Just a second. Then that, right? There are two bearish candles, but this formation is much different than that formation. Yeah? Okay, and then you can expect something as a result. All right. Yeah, we're gonna keep going to the right. And apart from that, candlesticks also provide you. Oh, okay, never mind. I don't wanna. It's too much about analysis, which I'm supposed to keep to the last. Okay, here we already saw that. Here I can split the chart. So in here I have oil, and here I have oil. Keep in mind, whatever you're clicking, it's going to open the sidebar to the right. So if I want to trade oil, I'm just going to click sell or buy. It's going to open me the oil. Okay, here, I'm going to keep it as platinum. Going to go back to the first. Okay, perfect. And now we're going to keep going to the right. Here we have indicators. It's not bad. We can just drag the Bollinger Bands here. Yeah, we can keep it as it is. Okay, and then we click submit and it stays on the chart very, very nicely. We can get rid of it as well. And in here, all the fun things that I've placed, I can also leave a note if I want, but it might be hidden. Okay, so, and all the timeline and the price line, you see down here, and the nice oval. I want to remember a certain given. Here is an example, right? You can also play with it if I want. Very, very helpful when it comes down to remember something that you've analyzed and you don't in particularly remember the formation that you've been analyzing. There is a question here. Can we trade it properly? Is this webinar have been recorded? Absolutely. Raphael. Right. So Raphael, the webinar is absolutely it's recorded, as I mentioned in the beginning, and should be uploaded to YouTube later on. Okay, it could be even today in a couple of hours, but I don't want to give any commitments. Okay, so we are done with the guide through about here. I think we can practically start get moving. Okay, so what I'm going to do is I'm going to put down here certain things. We're going to give the definitions and we will explain what each definition really means. Okay. Now, I'm looking at platinum. Platinum is one of the metals. Okay. And what I'm going to do is I'm going to go with a bare minimum just to demonstrate to myself and to you guys what can be the potential result. Okay, so I've changed, you see, one lot equals 100, 0.1 equals 10, and I went for the bare minimum 0.01. Okay, and now what I'm going to do is I'm going to click, there are 3 pending orders here. I'm going to click on both, take profit and stop loss, to understand what the platform is doing. Is it's showing me the possible profit, so I can know if it goes up to a certain point or down to a certain point, what can be the outcome, which is again extremely helpful because then I can decide if I want to do it or not, right? If I wouldn't do it, I could have never know what can possibly happen. It would be pure gambling. So right now when I'm looking at the buy scenario, obviously my intention is that the value will increase, right? When I'm buying something, I want the value to increase. When I'm selling something, I want the asset to decrease, right? The value to decrease. What happens if I'm buying and it decrease? Who knows? Let's suppose I'm buying now platinum and it goes against me from 898 to, let's say $20 down, okay? Down to here somewhere. Yeah. Okay, so what happens if it gets to the red line? Actually, this might be a sell scenario, so let's put the stop loss higher and the take profit at here, okay? Right. So, right, in this scenario, let's see what happens. So we are with the minimum and we're going to change the value $20 higher. Okay, and we are going to change the value $20 lower. Something doesn't make sense. This was higher. Oh, right. My bad. My bad. That should have been We are selling. Yes, we are selling. Okay. So it seems to be $20. You lose if you sell. Oh, okay. I lose if I sell. Okay. I don't know. I still don't know, but I'm just trying here. I'm trying. I'm not exactly sure. Okay, I just want to see what will happen. So I understand that with 1 unit, if I acquire 1 platinum ounce, and it goes across the chart from here to here, I'm gonna lose $20. And if it goes down from here to here, I can gain. Let's turn this one green. Okay. Yeah, so this is the scenario. Now, if I'm right and I don't have any goal, I can never know when to close my position. Okay, let's suppose I don't have those and I took a sell and it goes down. When will I close my position? Here it's good. How will I know? Maybe here it's good. Maybe here it's even better, right? Maybe I'll go to the white line. There we go. White line, how much money can I make? Let's see. So I can think, oh, sorry. So I can think, what happened to the line? Just disappeared on us. Okay. Okay, but now I don't make 20. Now I make 100. Look, I make 5 times more. So why should I compromise for the $20 away? Why should I put my take profit $20 away and not $100 away? Right? Because here I make more profits. Let me just show you, right? Look. Oh, sorry. Here I make 20, here I make 100. So why not take 100? What's the difference? Let me just remind you something, guys. I've changed the time frame to 1 month. So this can take me a month to get to here. Okay? Now I'm gonna get rid of that and we're gonna go back to where we were. Okay, 1 week. And what I'm gonna show you is a nice way to understand how frequent, how realistic is the price that I'm aiming for versus my entry. Okay, so if this is my entry and I wanted to end, so let's suppose that I want to close it here. Okay, and my target, so those things are here just to help us compose the position in a way that makes sense. Let's suppose that the target is just a second, $1,000. Okay, the time length can be 1 week. Okay, why do I need the summary to decide on the time frame that I'm making this $1,000? Few reasons. A, I need to know which candles I'm analyzing. I can't just go analyze minutes candle or hours candle when I'm actually planning to sustain this position for a week or weeks. Yeah, I could, but it's less relevant. Okay, because the averages and the numbers and the statistics for minutes and for weeks are different. Second reason is I want to know that it's worth my time. If I'm planning $1,000 if I'm planning to make $1,000 in a week, not bad, right? $4,000 a month. But if I'm planning to make this in a year, it comes down to less than $100 a month. It's not even enough to buy groceries, right? Okay. Now, the movements part can be applied. We can apply an indicator called average true range. Now, what it does is it's going to accumulate the, you see I type here AV and I'm going to just click and drag. Okay, let me show you again. I type AV, then I click and drag, then I click save. Let's change it to something else just for fun. And now we have statistically measured by the average true range the 14 candles to show us what a weekly movement can look like. Okay, this is the range. This is how much approximately Platinum can move per week. Okay, it's not guaranteed, but this is a lovely range to rely on. Maybe not purely, it still requires to do analysis here. Okay, but at least it's showing me that $20 down. What do you think? The take profit that I've placed here, is it in the range or without the range? What do you think? Is it in the range or out? $20 movements, also known as price difference, right? What is the difference? The difference between the entry to the price that we tested, right? Whether if it's for profit or for loss. Okay, now if with, oh sorry, let me bring it back to where it's been. That looks good. It also looks good. So, okay, this one should have been, okay. Yeah, so, okay, so to make 1,000, how many units do I need? For now, with one, I'm making 20. Okay, so let's see. 1 equals 20. 20, right? My question is, how many do I need to make 1,000? What do you think, guys? So I'm going to teach you a nice equation here. We're going to write it down. That's correct. Okay, and the way that this works is actually very simple. How does it work exactly? It works by summary divided by movements equals units, right? So if we basically end summary divided by units equals movements, okay? In other words, 1,000 divided by 20 is most definitely 50. Okay. Hypothetically, if we're gonna put 50 here, it's supposed to show us 1,000 in profit. Let's try. 5, 0, perfect. Okay. Oh, it moved a little? Oh, it did move a little. Never mind. Never mind. You see, the idea here is very simple to grasp. You have it written down here. This is a lovely template to use. It can be applied on all of your assets. Doesn't matter what you're trading. Okay, and with this approach, we can actually know what to expect. We can know $1,000. Okay, so 1,000, take profit, 878 equals $1,000 profit, and stop loss. Okay, just to sharpen again what those spending orders are. Okay, just to remember myself also. Take profit is closing the position with the profit. So that means I'm asking the platform to remember that Platinum, when I'm buying it now and I want to, when I'm selling now, as soon as it gets to here, I want to close the position with the profit and have my $1,000. If it goes against me, then perhaps I want to close it with $1,000. Now, just to compare my balance, just a second, balance equals 10,000, right? Minus 1,000 equals 10% exposure, right? Tell me, do you think, guys, that 10% is recommended or it's not really recommended? And also, I want to know, are there any questions till this point? Is there anything that doesn't make sense? Anything that not even that doesn't make sense? Is there anything that is blurry? Guys, feel free to ask. Is there a statistical method to see statistical outliers? In what sense? In what sense, Henning? If you can elaborate, maybe I'll understand a bit better. I know, Sol, that you want me to speak about strategies, but I maybe not have the time. Let me try and finish this one up, and then we'll see if we can speak about strategies just as an idea, right? Okay, so to understand what's happening here. So when I'm taking this position, right, if I'm looking at the same length, we have $20 up, $20 down. The exposure here is 10%. If a political decision is made which causes a day hike or loss, is there, that is the value taken out. We don't, you can visit the news section. In the news section, it can show you what things can get impacted by. And also, I assume that if you're using the economic calendar, you can basically categorize to which country you want. So if you're looking at the dollar, it could be things that are dollar related, like the NFP, the CPI, and things related to the dollar. If it's something related to the pound, could also be interest rate or something else. If it's related to the oil, so again, it's very various. So I think it might be difficult to answer that. Why should we be trading $1,000 and still losing the same amount? Exactly. Thank you. That's exactly what I'm saying. Thank you. All right. So this doesn't make any sense. Is that correct? So to lose 1,000 and to actually it might be. I don't want to disqualify this. I'm sorry, I take it back. I don't want to disqualify anybody's strategies. You can still do that, and that's fine if you want, okay? But let me still teach you to adjust it, okay? Because I'm not supposed to tell anyone what to do, but I want you to be able to adjust it. So let's suppose that I want to keep my 1,000 in profits, and I want to reduce my loss still, okay? Let's suppose that I want to reduce my loss. What I can do is I can basically change here from 918, right, 918 to 900 and let's say 12. Then I lose less, right? Or even I think, let's make it 13. Oh, it kept on moving. You see, the lower I get with the stop loss, the less I lose. But there is a but. I don't want my stop loss to be right on my entry. Okay? What happens if my stop loss is too close to my entry, right? Okay? So there is a limit to that. What I can do, okay, is to diversify. I can either diversify or to compound. So if I want to reduce my my exposure, okay, what can I do? I can just lower the lot size to 25, and then my 500. Okay, if my target would have been $1,000, it doesn't need to be in a single position, right? This is for you, Sol. Sol, you wanted me to speak about strategies, so right now I'm giving you a key ingredient to what might be called a successful strategy based on diversification. There is no obligation on my end as a trader to commit to this position for $1,000. I can make this $1,000 through 2 positions or 5 positions or 10 positions or as many positions as I want. So if I lower my lot size, okay, and I can lose 500 instead of 1,000 and I have made profit and I didn't lose, I can just open another position if I want to. Okay? Does that make sense, guys? What I just said. Diversification, guys. Diversification that allows you to spread your risk to different levels, to different instruments, and as long as you have harmony and your ratio is with higher profit with losses, that means you're making if you are making more profits than losses, you're going to still make progress. Okay, you don't have to make profits in each and every position. Okay, now the last thing that I'm going to show you, let's see how much time we have left. Just a second, guys. How many assets? Franklin, I can't name a number. Can we trade 50% of our balances? Absolutely, yes. Refile. Oh, one more thing I wanted to show you guys. Right, so thank you for reminding me. I almost forgot to speak about the leverage. Right. So the value here, we have price per unit. This is really, really simple, guys. It's only going to take us a minute. So we have price per unit. Price per unit is 19,909.13. Okay. No, it's 896. Sorry. 896. Right. The amount of units we already saw, it's 25. Okay. And this one has changed. And this one is also changed. Okay. And this one also changed. All right. Now, what we're going to do is we're just going to see if we can acquire this position or not. How do we do that? We have the value, you see it's written here, and it's based on the price per unit versus how many units you take. So that's 22,425. Now, the leverage in this case is 1 to 10. Okay, that means that my balance will behave as if I had 10 times more. Okay, multiplies. That's what it does. It multiplies buying and selling. And that means that with the same logic, I can just divide margin impact, margin requirement, okay? And I can simply just divide the value by, just a second, guys, by the leverage. Okay, which as already done, right? Now, half of the things that I taught you, the platform is doing it for you guys. So just either use the platform, which is fine. Again, you can use the platform, but I taught you that to be able to do it manually. In case you're MT4 or MT5 trader and then you want to have this ability and not to rely on the platform, okay, you can get further information by clicking here on the instrument details. It's showing you here the buyers and sellers. You see 10 versus 90%. In here, it's showing you the overnight fee. All right, guys, I think we pretty much covered everything that we should. Thank you, Mr. Rafael. Can we have more webinar like this? Yeah, absolutely, absolutely. So what you can do, like I said, is you can access our channel on YouTube and you can simply find whatever webinar you want. We have an excellent analysis trading by Mr. Troy Frey. We also have an amazing webinar by Mr. Friedman, Simon Friedman. Okay, and I also have the live Q&A tomorrow if you want to join us. We have many, many more educational content which you are more than welcome to enjoy. Guys, unfortunately, we have to say goodbye. Our time is up. I appreciate everybody who assisted me through the audience. It was very nice of you. And there is a question by Amos. Hi, those AvaTrade has AI trading. Could be, but we're not offering. AvaTrade does not, well, at least currently, we're not offering AI trading. Okay, if you want, I believe that through your account manager, you can implement it on the chart in your own way. But AvaTrade does not offer that. Absolutely, with a pleasure. So you guys, You guys, I hope I see that people commenting it was helpful, and that's exactly why I'm here. And I'm happy that it helps. And that's it. You guys enjoy the rest of the week. I hope you'll have fruitful week. And that's it. Like I said, you can join us tomorrow in the live Q&A. And that's it. So you guys have the best and have a good day.